SPY pretty much bounced the 4-hour period for the past 180 days uh, exponential gravitational line. So it hit it and then it bounced. Now it's going up. It's a good indication that the SPY will continue rising. I don't know exactly what the SPY is going to do per se, but I do know now it's definitely changed its trend. It's hit a double bottom on the gravitational line and looks like now it's going to accelerate. As you can see, for the past couple of days, I don't think the institutions and the Fed's really going to let the SPY cross this gravitational line. So every time it hits it, it bounces. You see that here, 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 and here. Now, I don't know how high the SPY will go, but what I do know is once the SPY starts hooking downwards, I would say it's probably safe to bet you can probably buy puts on the SPY for this gravitational line about 2 weeks out or so. And within those 2 weeks, from that peak, it should hit it, unless the SPY is like astronomically rallying. But within 2 weeks, it should hit it, and then it'll bounce. So I feel like that'd be an easy way to make money on puts. We'll definitely remove the amount of stress from having a potential gambling point of view, just because it's been very consistent. And also, you know, when you have that type of edge, you don't have to worry about it going down, going up, going down, because you know the general idea is it's going to go down at some point. So if you get a call a put that's almost in the money, for sure within that time period, it should hit in the money. You should be able to make some money. As far as the markets being really choppy, I decided to sit back and watch what the Fed was doing with the market today and pretty much all week. I know they changed the time that they're pumping. So rather than going all in on options where if the stock price moves up and down but doesn't really move a whole lot during the day, without the price of a stock moving a whole lot within a day, you don't make a whole lot of money on options. And on top of that, your risk reward ratio for options is very, very low. So you're going to have a high amount of risk. And as you can see here, that $1 fluctuation, if you're wrong, you can lose a lot of money. And if you're right, you make, you make an okay amount of money. But the risk reward and having this, oscillating pretty much flatline trend is really, really dangerous. And I really don't like risk, so I didn't want to play the options and then, the SPY decides to go the opposite way because, you think one thing today and then tomorrow it's something else. I didn't want to do that, so I went with something new. And this has been a theory that I've been working on for quite a while. It's basically revolves around BDCs, and BDCs are business development companies. They essentially help loan out companies for struggling businesses. They help loan out money for starting businesses and loan out money for struggling businesses. They buy back some companies and they help mergers, they help acquisitions, and they basically help companies go to scale. So pretty much, GSBD is one of the BDCs that I've been watching. This is the Goldman Sachs BDC. So you can see on the Fibonacci, which I haven't drawn, which I'm drawing right now, you can see that it pretty much has bottomed out at right around 625, and the top part is closer to 1785. So I bought down here at 1644, and it's 1660 right now. So it's about 16 cents per share, which isn't a whole lot, but it's a much safer route. And on top of that, something that's really important is the ex-dividend date is next Monday, so I'm buying prior to the ex-dividend date so that I will also receive the dividends plus capital gains. So I'm expecting GSBD to go somewhere near $17. I'm going to get the 45-cent per share capital gain from the dividend, and I'm also going to get this capital gain, from the stock price. So I'm overall expecting to make $1 per share. So I open a position here. If I can get Robinhood to load. Yeah, so I opened up a position here. Oh, there it is. So I had essentially a VIX call. It went down today, so I went ahead and stopped the loss. But overall, I opened up this position on GSBD. I am up 1.41%. which isn't a whole lot, but with 41 shares, I feel like it's pretty much going to make my ticker go side or my portfolio go sideways for a little bit, and then it'll slowly climb. As it's climbing, then I'll sell to near towards Monday, and I think this is going to be a really good, safe way to build equity while I wait out the market just to see, the direction of the market. So right now, there's not really a whole lot of direction. You can see on the 1 hour, it looks like SPY is going to rally. Now, however, it could rally and they could crash. That's a risk I don't want to take. Uh, and there's not really anything certain right now. Now, if this yellow line does cross this purple line, and then the yellow and the purple are going to cross this pink line, then I do know that once it crosses this pink line, there's a good indication that SPY will rally. So if that does happen, then I could buy calls on SPY. I could buy puts on VIX. And I feel like as that happens, that would be a good time to enter the actual contracts. It looks like the market has ended. We are in after hours, so typically in after hours, if you see for GSPD, there's a huge difference in the spread because after hours trading is completely different from during hours trading. You see after hours, people are buying at 16.29,